Morning, everybody. Just wanted to do a quick update on mainly gold, but also a quick look at the S&P 500 index. So you can see overnight we did initially have a positive start to the US market, but when some Fed minutes came out that showed that QE3 was less likely, then the market did kind of sell off a little bit. But you can see in the context of what's been happening over the last couple of weeks, that really it wasn't any particularly big deal, and it's really holding the support of these moving averages. And as I've been saying over the last week or two, the signs to me are that the S&P is going to work off this overbought state that it's been in for some time, probably by a bit of choppy sideways to mildly up action. And that's pretty much how it's panning out to me, rather than actually getting a more significant correction back into the mid-1330s as a lot of people were expecting. So I think the odds favour, particularly the seasonality that we're in now. This tends to be a more positive time of the year for stocks and commodities. So I really think we've probably still got a period of reasonably okay trading. And I've got an initial target just as a structure, not a prediction, but a loose target to work to on the S&P of around 1440. Now let's just have a look at gold, because gold really is proving to be a little bit frustrating. But let's have a look at it first of all on a weekly chart. And I'm still of the view that we've started a major wave up, and we're still just mucking around in the corrective phase of the first move that started from the 30th of December and ran until late in February. So that was the initial move. We've retraced the initial move. And I wish we could sustain an uptrend, but I mean sometimes markets just don't go exactly the way that you'd want them to. Last night there was a bit of a fall, but I really want to address a perspective on what's happening with gold and this fixation that everybody's got with QE3, which I think is just ridiculous. First of all, some stats. In the first quarter, gold itself was up by 6.7%, yet the gold miners indexes, the HUI or the GDX, were down around about 5%. Now they were already lagging enormously, so for the actual gold stock indices to be down by 5% when gold is up by nearly 7% is just crazy. So I want to take a little bit more of a look at that. And the first point I want to make is that markets always do tend to revert to the mean over time. So what is an extreme oversold or overbought today will eventually, capital flows will reverse that and things will come back to normal. And I'm sure that that's going to happen with gold stocks. Now, the second quarter in the US is seasonally a better time. It's coming into the spring, and it's just generally a better time for stock markets and for commodities. Now, short-term movements in the gold market are really being driven by a focus on QE3 and will it happen or won't it happen. But as I've explained before, the main drivers for the price of gold, and this has been proven statistically over many years, the main driver is whether or not we've got negative real interest rates, which we have, certainly in the States, and if we've got currency debasement, because both of those two things lead to lower purchasing power for people that have got their money in fixed interest. And we've got both of those things now big time. So to me, the big picture trend, getting outside the day-to-day noise, the big picture trend for gold has just got to be up, because I don't see that negative real interest rate environment or the actions of central banks to continue to devalue their currencies. I just don't see that's going to change anytime soon. But in any case, this focus on QE3 is quite ridiculous, because the Fed's doing it anyway. They've already said we've got zero interest rates to 2014. We've had Operation Twist. We've had all kinds of other things that I can't recall just at the minute. Well, we're going to get Operation X, Y, and Z, I'm sure, in the future. So the Fed is doing this stuff anyway. So with everybody hanging on every word about QE3, it's just crazy. So I'd really encourage you to look beyond the noise and focus on buying quality businesses, quality gold businesses, and use the crowd behaviour concept of reversion to the mean to the best effect, because that's the most reliable thing that you're ever going to see in the stock market, and the most reliable thing that you can ever exploit in the stock market. Now, one possible explanation for the extraordinary underperformance of those gold stock indices in the States has been the disappearance of the individual retail investor in the US. 2011 was the fifth straight year where more money left US domestic equity funds than what came into it. And when you get into that smaller sector of the market where the institutions aren't particularly active because the stocks are too small, it's really the individuals that propel the smaller commodity stocks. So certainly that is part of what's holding it back. But I think ultimately, people are going to see the potential, and in all bull runs, the major public participation tends to come late in the cycle. And with the March quarter headline performance of the S&P 500 as setting new multi-year highs, I'm sure that we are going to see money start to come back in, and I really still am of the view that April and possibly into May is going to be a good burst for commodity stocks. Now, there's just one other chart I want to have a look at just to reinforce this point on gold, and that is this 30-year Treasury bond. And again, I've gone through this in various forums in recent months, but you can see here we had a blip up which was in mid to early to mid-March, and unlike the blip that we got in October, it now looks like, particularly after two of the last three sessions, it now looks like we may well be getting into a trend on Treasury bond yields. Now, if bond yields start to rise, then that's going to be extremely positive for gold, because what that's saying is that the expectations for inflation are now much higher than they were. So it's not an absolute dead set proven yet, but you have to say that this little period here in the last month is much more significant than what we saw back in October. So I believe very firmly that the expectations for inflation rising are definitely there, and that's got to be a huge positive for gold when you get outside this day-to-day noise. So don't get too fixated on what gold is doing on a day-to-day basis, and keep a focus on quality gold stocks, because Australia's got some absolute rippers. So that's it. I just thought that would help with perspective. Cheers.